So you talked about, so we get an interest rate announcement, 1 o'clock. It's almost a certainty they cut by 25 basis points. If they didn't, that would rock everybody's world a little bit. What I mean by that is we'll have a more outsized move.
Right.
Now, within that release, they'll put out a statement, and the talking heads will parse where any words change. What will be more important is the tone of what he says at 1:30. So you get kind of a move at 1. I think a more outsized move at 1:30. Do I know the direction of that? Absolutely. I'm relatively indifferent to what the chucklehead says. I just want him to say something that gives me some elasticity and movement. So that is all good. But you mentioned also what's coming out, and you need to be mindful of, are these, every quarter they release their, again, I think the hardest thing to do as an economist, but it's what they're paid for, is, okay, what's your guess? And the guess is what they think. And so walk us through what this is, Glenn, because it will come out and there'll be commentary about the dot plots afterwards.
Right.
What they are, I do caveat this by, don't get wrapped up in this stuff. To have a cursory understanding of when they talk about it, if that makes you feel, and again, it does to me too, it makes you feel like, okay, I get that. I've dispensed with it. But if the market moves on that, there's some value to put context around. Is it a favorable move or not? What is it?
Right. Yeah. So you know that these are released quarterly, so we don't get them every Fed meeting.
Darn.
But I'd say there is some added significance to this one just being year end, because as you said, we already know with almost certainty that we'll get a cut today. That'll be the cuts for the year. It was a lot slower than we thought at the beginning of the year. But that being said, everyone's looking to next year.
Right.
And futures markets right now, last I checked, we're pricing in only 50 basis points of cuts for the whole of next year.
Right.
And so but that distribution, while right now for today's decision, everyone's betting on one cut, the distribution all the way out to 2025 is very spread out. People taking guesses across a range of more than 100 basis points as to what they'll be. But what we will get from this dot plot is just a breakdown of all the Fed members and their expectations for where interest rates will settle in 2025. And then into 2026, 2027, and then where we settle in kind of this longer run, what they think that neutral rate will be. And so while it is kind of just throwing darts at a dartboard, everyone else has been throwing their own darts for what 2025 will bring. So this at least will be interesting to see how in agreement these Fed members are.
This was from September.
Correct, yeah.
So you've got the range everywhere from them bringing down rates in 2026, another 150 basis points, to not bringing them down at all.
Right, yeah. So
each dot is one of the 16 plus, I think there's 17 total. So Powell puts one in too?
I'm not sure.
Okay.
I think he just puts the big dot.
Okay.
But yeah, so it gives us just a rough estimate of what they are thinking at the current moment. Obviously, their favorite stance to be is nimble and data dependent, and so not tying down to...
Last is September, so the median here, or the most frequent, is that mode? I forget, whatever, is 275 to 3. So that's almost 100 plus basis points of cuts in 2026.
Right.
The market, as you said, is somewhere between 25 and 50 basis points of cuts.
And a lot of that happened since September.
Right.
So it'll be interesting to see if they recalibrated.
Is the question, do the chuckleheads all readjust their guesses?
That is the question, and they definitely will. But what we've seen and what I find interesting is that I can't remember if it's the September one or the June one, where the futures markets were pricing in one thing. This dot plot comes out, says a completely different story, and they never really recalibrated. The futures markets definitely stuck to their guns and just didn't really take this into consideration. Whereas other times we do see more of a recalibration based on these figures. So curious to see if the year end
and it's interesting because, again, economists to change dramatically their guess after 3 months is kind of pushing.
Right. Yeah, how much has changed, but
right. All right. So it's good to walk through. This will be something they talk about. I'm sure this will be droned on CNBC at length because it gives them an hour's worth of stuff to talk about. In context, it's their best guess. I tend to like the market's best guess better because there's some money behind it versus these guys. Obviously, they're very smart, talented economists. But I think, it's the best guess. And if this dramatically shifts one way or another, this is the kind of thing for me as a trader. If it does, this is the move I like to fade. Right. Oh, the dot plot shifted by 75 basis points. Or they're still thinking that there's, again, the majority of them are thinking there's 6 cuts coming. Well, and you see yields rise. I'm sorry, yields fall, bonds rise. Probably the dollar gets sold off a little bit on that. That's a move I would fade, just as a contrarian, because I think this is less truly impactful as to what they do. I mean, they've talked endlessly about not even doing this exercise anymore because I think they feel the same frustration.
Interesting.
If it's a shiny whistle that everybody's going to follow, they're not even putting a lot of credence in it. So we'll see. But all right, so we've got that coming out, which is going to be interesting. Let's jump over to the markets and take a look, because we can look at 2 different markets. Let's start with the euro.
Yeah, and this is interesting what you're saying. We're looking at the daily chart here. And if we could just zoom back out, guys. Yeah, thank you. Yeah, we are really hovering right around this 105 level, crossing it nearly every day for the past 10 days. And we haven't seen any strength since we had that one day, that one Friday above 106 coming back down. What are your thoughts on this chart?
Well, and again, we know the range, 106 down to 103. I'd say, 103.80. I mean, we printed 103.60, but 103.80 to 106 is our range. We are, I mean, when you look at that, that is coiling market. What it just means is people, shorts are probably taking some profits, and everybody is managing positions a little bit. There's not a lot of new positions being put on here. This is what you would a lot of times see before an announcement like this. Now, I think it's like when you go back and think, okay, the rate cut's a certainty. What else are they going to say that wouldn't cause me to trade? Well, people are mindful that there is a small chance they could say something that, or you get a random move that dislodges markets a little bit. So for me, it'll be interesting to see, given the fact that the bulk of this is certain, will they walk back the dot plot? I don't know. Maybe a little bit. But I don't see, if you think about it, okay, what dramatically is going to change the fact that U.S. rates are down, the number of cuts basis an more accurate reflector, which is the FedWatch tool, and FOMC, Fed funds futures pricing, is indicating 2 more cuts. They would have to say something dramatically like, we're going to wait and see on any more cuts to really get the market to move. If that's the case, the dollar gets a bid tone to it, and we test that 104 level. I don't see them doing that. So for me, the initial move might be an interesting, and again, this is, everybody's got their own thing, might be, if you look at this and you say, okay, what's the 1 standard deviation daily range short term? It's nothing. It's 22, 23 pips. Going out a month, it's probably 40 or 50 pips, which is a healthy trading range. Around binary events, I will add either 1.5 or 2 times to that. So 75 to 100 basis points. Coincidentally, that lines up at 106 and 104, which, okay, now I'm starting to get an idea of what I want to do. And if the market gets up to 106 or down to 104, and I'm a contrarian, I may want to sell some 106s and buy with some 104s. This is just one way to look at it. If you're a momentum guy and you see either of those break, then you might want to think, okay, it's trading 106.30. They finally put some challenge to this to these shorts in the euro dollar market, and they're going to be in a more uncomfortable position. If it trades through 104, anybody who's bought this dip, is going to be feeling a little bit of hurt, and maybe there's a little bit more downside to be done. Either one is, I'm not saying either one works or not, because, but when you start to think about it, you start to set, okay, if I'm going to be the contrarian, those levels have to hold.
Yeah.
And if they don't, I'm going to be mindful of where I'm going to get out. Now, if I sell 105.90s and it's 106.30 bid in 5 minutes, I don't care if it takes an hour to get there or 5 minutes to get there. I've now decided that my reversion strategy probably isn't going to hold.
Yeah.
And I'm mindful. The fact that the market gets through your idea quickly should have no impact on your decision around how you manage it. Stay disciplined. And part of the way we stay disciplined is making those decisions before we actually do them. So, and I know it feels odd. I just sold a 100 pip rally. They're now 130 higher, and I'm covering them. That is like, well, how much higher can they go? That's the one thing we don't know. And you want to be able to stay engaged. So don't get the pace of the move. Don't let that dissuade you from your mechanics. Think about your decisions ahead of time. Stick with them. And sometimes you'll cover those shorts. And was that the high? Yeah. So what? You move on to the next trade. That is part of the game here. We're not going to have 100% winners. We'd like to have 60-40. 55, I ran a prop shops. We did a lot of trading in very short increments. 55, 45 days were fantastic days. So don't think that losses are part of what we do. How we manage them is where we truly start to meet with success. Stay disciplined around that. If you want to trade the breakout and they trade appreciably through 106 and you're going to trade momentum, well, the shorts are stressed and you buy them and they fold back down into the range, you're going to manage that the same way. And if the number comes out and they go nowhere, you're done.
Yeah.
I have my strategy. It didn't reach my targets. I'm moving on to the next opportunity. Make those decisions ahead of time. You're going to be good. Let's go over and look at Canada, because Canada is giving us a very different market.
Yeah, and
coiled spring, whatever you want to call it. This is a consolidated market. Canada,
not so much.
All we can say is it stopped rallying after a huge rally. Now, the Trudeau government's having a hard time.
Yeah.
The tariff thing is hanging over their head. Their unemployment rate is growing. This is why we saw an aggressive move out of Canada. Now, historically, Canadian rates and Australian rates have always had anywhere from 75 to 125 basis points above U.S. rates. That was kind of a cushion they had. Now, that's on average for 20 years. Now, stats like that, you got to take with a grain of salt, because that was then, this is now. We have a much more globalized, developed market. So do they need to maintain that interest rate buffer to protect their currency? Not necessarily so. And they're right now looking at, again, they've already moved down to 4.25. So they're moving aggressively to address some issues.
Yep.
And are they tolerating a weaker Canada? You know, one of the levers countries can use is a cheaper currency to export their way into a bit of growth. Is this a subtle response to, well, we're going to put tariffs on you? Well, yeah, go ahead and put tariffs on me. I'll market my currency down by 20%. And, you know, it's a push.
Interesting.
It's one thing to think. So is this a lot of movement? Absolutely. The tape action is not telling me there's two-way action left in this yet. But if we think about this, here's a market that's probably had closer to a 65 or 70 pip daily range. It's been all one way.
Right.
But we've had it. So what do I do here? It's a little bit different dynamic here. If you're the momentum guy and they breach 143.5, there is a lot of anybody who has been selling dollar Canada here is in a tough spot. You probably are moving your levels of where you want to participate in a little bit more. And a momentum guy, again, doesn't mean he just trades breakouts to the upside. A momentum guy is saying the trend is up. If I get a pullback, that's an opportunity to buy because the trend's going to resume.
Gotcha.
So a momentum guy is looking at this from a little bit different lens. Here, you'd probably want a decent pullback, but not too destructive a one.
Yeah.
So I would say between 75 and 125 pips, if you get that kind of move, back down to the 142 level, and you're a momentum guy looking for a bounce back, that's probably it. The contrarian guy really has only one side to trade here, and it's a dicier side.
Yeah.
So I would give myself more elasticity. I'd double that range. I'd say, all right, if I want to fade this, let the market get to 144.5. Now, will it get there? Chances are not. That's a big move. But we don't know. I would probably let that accordion really stretch out.
Yeah.
And I'd be very mindful of what's overdone. Well, we would have said 141 was overdone, 140 was overdone, 142.
Yeah.
So that's the lesson here. Think about where you want to manage that trade, and you may be managing it quickly if it continues to go. So opportunities here, absolutely. Both types of traders, sure. Think about your game plan, put it in place, and don't be frustrated if it doesn't get to those levels. But think about what you want to accomplish here. There's great trades to be had on both sides here. Good binary event coming out. Then we've got more coming out tomorrow. We'll talk about that on tomorrow's show. But guys, thanks for tuning in. Glenn, great walkthrough.
Thank you.
Have a great day, guys.